bear market, this is the time we tell you people to sit tight and watch the markets closely.
Hey guys, so today we're going to look at our analysis, our weekly technical analysis. I believe this is episode 42. So basically, which means 42 weeks of content, 42 weeks of analyzing the markets, 42 weeks of making money. Of course, there's been losses along the way. Not everything is perfect, but we try our best to give high probable trades. So today I'll cover a few pairs. Today I'll start with gold. Mainly you're going to see me doing with Elliott wave analysis. So for those people who do Elliott waves, that's what I'm going to do today. So this is the weekly chart on gold. Gold. We've been having this beautiful pattern, the 1 2 3 4 5. Of course, it doesn't start there, it goes all the way behind. I've done all that, but I share that more on the subscription page, so you can always subscribe to our channel and get full information. This is just a short summary of what I have. So we can see we had this channel starting off. So we had a 1 2 3 beautiful break of this channel. We've retested the channel not once, we just retested it twice. So what you're seeing here, this correction here, of course over here just looks like a big downward move, but if you go to the daily chart, you can look at it much more clearly. You can see what formation was actually happening. So if you can see, if we get our 5 here, so as you can see, this is our beautiful 1, we got that 2 at triangles formation, 3 we had 4 also as a triangle formation, and we got that 5. So after 5 we had, because it was the complete of a full wave, we had a deep correction. So what we're looking at over here, so looking at what we have here is what we see now. We had that ABC sort of it's known as an extended flat correction. So we get that 335 wave that we can see over there, which I'll do more on our subscription page and show you exactly what I'm looking at. But now this is what you're getting. So you can see we had this triangle, this trend line, this first bounce, second bounce, third bounce, which was beautifully broken after this move. And what we got is that market came and shot back above that level, above our support level, resistance level here at 1575, around that level, between 1575 and 1550, around this level. You can see market shot back up and we retested this trend line that we had, and market has been shooting up ever since. So if you go down to the 4-hour chart, this is exactly what you get. So we can see that market came, we had our bottom here, then we had sort of a 1 2, we got a 2 here, got a very deep correction, then we got that 3 move, then we got that 4 correction. So this is 4. Maybe if I just label that for you so that I do not confuse you. So we had a 1 2 3 4, and you see now we're getting that push to 5. So basically this is what I'm talking about. So we had that beautiful correction up to that point. My 3 is here, so we had that ABC correction, which was also just like the bigger time frame, an extended flat or expanded flat depending on how you call it. And then we had that retracement to 38.2, and now market has been shooting further up. I am currently in a long trade on this one that I entered when the market broke above 1600. So what you can see here, that was last week. I had an entry around here, market came, shot back down, I went short, I was hedging that trade, market came and got support at 1575 and shot back up. So I did not want to deal with this fight over here. If you go to the 1-hour chart, you can see that was a very there was a lot of fight around that level. So around here, so you can see market shot above, we rejected 1600, and 1600 was a major point. So you can see we had here, and we broke below it finally. Then we had that rejection, then market came, and we had another rejection here, then we finally broke above. So you see this candlestick here. Once market broke above this level, I got an entry at 1602. I remember, that's why I have a long level which I'm still currently holding and I'm still running with it. I got another entry at 1608 and I was currently running that. And as you can see over here, this green line is what I had indicated as another resistance level, which if market broke up above, I'll be taking another long trade. And you can see market was capped at market broke 1625 and shot further up, and now that's what we're currently getting. I'm looking for another entry around this level. If we go to the 15-minute chart, we can clearly see it. So that's why I go to 15-minute chart. I only do 15-minute chart on commodities, especially gold. So that's what I'm looking at. What you can see is here. So you can see I have a green line. So I'm looking for another entry around here. I'm just waiting for this candlestick to close, give me a better confirmation. If you put the pivot points, you can get to see it's a pivot. Okay, I don't know why they're not showing. So anyway, so we have a pivot point. There we go. So you can see this pivot point is in line with our 38.2 Fibonacci level, this region here, and is also in line with our support level at 1645. So this is another entry that I'm looking at over here. If market shoots further down, I'm looking maybe for 61.8 at 1630, but there's so much momentum on this pair that market might fail to come back down here. But anything can happen in the markets, and that's why I'm open to that. So I'm looking for another entry around down here, a very good risk reward. We're shooting to go to 1700 and above. So if you get an entry around here, we're looking for targets at 1700. Very good entry. Even right now where the market is with our R3 level, so you can see our R3 is around here. So a very good risk reward. So I'm looking for that entry. Right now is London Open. That's why we are getting this much momentum. Market is just retracing, but we're having that much momentum to the upside. Maybe stops below 1630 level. So that's what I'm looking at. Very good risk reward, 1:4, and that's what we're looking at on gold. So very high probable trade. I don't give out trades as much on the online platform. I mainly give it on our YouTube platform. I don't give it that much. I give it on the subscription page, but this is almost a very high guaranteed trade. So you can take that short level. If market shoots further down, we're looking to enter maybe at the bounce of this trend line. As you can see, this trend line that we have over here, so we had that one bounce, two bounce, and maybe you get that 61.8. So if market is capped here and continues shooting down, we're looking for an entry here. Wait for the 1 hour close to close. Wait for this at 12. Right now is 11. Maybe this video might come out a bit late because of editing, but look for that entry around there. If market shoots above, we're looking for those longs, especially if market comes and shoots above against 1670, creates a new high, another long entry, and we're looking for targets at 1700 and above. My 1600 level entry, I'm looking for levels higher. So that's what we're looking at. Paying attention to that and have a good trade. So let's go on to the next chart. Okay guys, so now we're down to Euro USD. Very good chart formation forming. A lot of noise during the past few weeks because it's the weekly chart. You can see market short all the way up there, came back down here, and now we're sort of getting a slowdown in that crazy momentum. So if we go down to the daily chart, so looking at what is happening recently. So what actually happened after market shot back up that level, we came down, we had this retracement to 61.8. Market has been shooting further down, and maybe you are looking at first for that momentum to continue to the downside. But if you go down to the forward chart, this is what we're getting. That downward momentum, downward analysis is being nullified. So if you look clearly at this, market went up, came back down. Yes, we're capped up there on the daily chart by 61.8, but right now we're being capped by 78.6 to the downside. We also have that sort of ABC formation. Maybe if I just draw it for you, just so I don't confuse you, ABC. So if you look at that, we have that correction straight to the 78.6, had a sort of consolidation around here. If you take the consolidation area, we can see we had around that area. Let's send that to the back. So you can see we had that formation. Market broke above that consolidation area and has broken above this downward trend line. Key points to look at and to pay attention to. So since market is breaking above that, we've had that retracement to 78.6 around that region, and market now is, if we get that close, which will close, this is a 4-hour chart which will close in the next I think 40 minutes, because now it's heading to 12 here noon, that's here in Kenya. So if you get that close above that level, we'll be looking for targets, looking for this market to shoot further up, maybe even to create new highs to levels above 1.12 level. But maybe if we get that push right now, we get that target at 1.095 level, this region around here, first target. And if that one is broken, we're looking for further moves to the upside. So that's Euro USD. Maybe if you go to the 1-hour chart to look at it more clearly, there's nothing much, no deep analysis on this one. We're getting that already on the hour close. We've had one close above and two closes above that region that we were looking at. So pay key attention to this one. There's a lot of potential to this one. Maybe if markets shoot down, we can get that retest of this trend line and market shoots back above. So basically that's what I'm looking at. That's not a very bad risk reward ratio. If we take the risk reward tool, what we're looking at, maybe if we enter at this level, if we get a retest, there we go. We're looking for targets first. What I'd say that around first target around this level with a very tight what is it called, stop loss, and maybe this would be a first good target around here at 1.115 level. Maybe put your stops below previous low around here, and that's a good risk reward of 1:3. So we are targeting this previous high over here. That's why I've kept that level, and that can be also a very good trade if market heads to your side. So that's basically what I'm looking at on this one. And let's go down to USD card. So another very high probable trade. So what we're looking at is basically, I've been giving this to the subscription page a lot since the past 2 weeks. The rejection of this level 1.42 level is very, very key, and what we're seeing is market is failing to break above that level. We got a gap open on Monday, which I'll show on the hourly chart, and market has been pushing down. So what I want you to look at here is the daily chart for yesterday. We got that it's sort of a piercing pattern. For those who don't know, piercing pattern is market broke above, opened as a gap, that level, we closed engulfing this candlestick over here. I'm not familiar with the name. I'm not sure if it's the piercing pattern or dark cloud cover. I'm not sure with those names, but that's a candlestick formation that I was paying attention to. So after this close over here, that's what I was waiting for, to get that confirmation. I have a short entry that I've entered today at this level, looking for market to push further down, breaking our previous support at this level and heading further down. So if you go down to the 4-hour chart, this is what you're looking at. So you can see I was waiting for this 4-hour chart to break below this level. I was waiting for, because there's a lot of, if you go down to the 30 minutes, I just skip that. Actually, if we go back to that, what I want you to pay attention is I was looking at this counter trend line. So as you can see, market bounced off here. So we had that A, B, C, D formation, and that E now is what is happening. So we're looking, I was waiting for a break of this counter trend line. There was a lot of noise on this day, a lot of noise. So now market is pushing down. So I was waiting for this first break of this level. So you can see market broke, we had a retest, and market has been shooting down. This was earlier on yesterday. So if we go to the 30-minute chart, why I entered around down here, what I was waiting for is, as much as this was a good entry and it's something I was paying attention to, I was looking to enter around here, but I wanted a better confirmation of a short. So it depends with your strategy. This is part of my strategy. So this was also a good entry, and market broke, retest. And why I waited for this is because if you remove the trend lines, we have to pay attention to this consolidation region. So So we had this bounce here, we had a bounce here, bounce here, bounce here, bounce here, came back up, we had a bounce here, and this was a perfect entry for yesterday. We had that E level and market broke above this, down this level. I was paying more attention to gold, that's why I didn't have an entry over here, but this was a perfect entry. We saw this gap open, the first 30-minute close, we closed below this level. That was a good entry to go short. If you entered around this level, you'll be up more than about 200 pips at the moment. So why I waited for that break is because I wanted a better confirmation. So I wanted the market to come out of this consolidation. So first break that I got over here, I had a short entry. So that's what I was paying attention to. So market can come back, retest this level. I have no problem with that. That can happen in the market. So I'm waiting for a retest over here, maybe get another entry. That's why you can see I have this yellow dotted line, so it's sort of my alarm. So if market gets back there, I can get another short entry to push the market down. But this is a very high probable trade. We're looking for our first target around here at 1.3900 level around here, and ultimate target at 3750. Good risk reward of 1:4.5. So that's a good trade also I'm looking at. And maybe we can look at the last pair. Let's look at GBP AUD, sort of long term, then we can see what happens next. GBP AUD, this is the last pair we're going to look at. I'm sure it's been disturbing a few people, but now I haven't really done an analysis on this one. I was waiting for a better confirmation, so I've been putting this chart on the side for a bit. But right now what is happening is that I'm starting to pick it back up, looking for good trades to be taken here. So what you can see, I basically have this A, B, C, D, E formation. E has been capped around 78.6 and 71 Fibonacci level, and in line with this downward trend line. So you can plot this. This is the weekly chart, so you can take this point of mine, I don't mind. So we got our first bounce, second bounce here, we spiked up above, and then got this fourth bounce over here. Now we're getting sort of that fifth bounce. So what I'm looking at here, so market has been capped by all those. So the downward trend line, the upward channel formation, the Fibonacci level. If you go down to the daily chart, so what we're looking at here is that we also have this resistance level that market had been capped with. So you can see around this level. So if you take I don't know why that is locked. So if you take this previous resistance level, that market was capped here, and what happened here after market was capped, we had this crazy downfall which came later on after that. So basically this is what we're getting around here. So you can see what was happening. When I'm saying there was a lot of noise, is that there was a lot of noise almost the whole of March. So this was unnecessary noise. So it's better, just according to my strategy, it was better for me to stay out of the market. Just look at this, because it's a lot of pips, and GA can really wipe out a lot of your accounts. So if you don't know what is happening in the markets, just be patient and wait to see what is happening. So you can see I have this determining level. So I'm waiting for this pair to short. I'm waiting for this pair to fall all the way down to around this level. Maybe even first target before we get that level is around here, which has been so you can see market was rejected here once. Let's just zoom that more so that you can see. So you can see we had that 1, 2, 3. So I'm waiting for another push to the downside. This is my determining level to see if market will push to the downside. We can see on the daily chart, on the weekly chart, that we've seen that market has been capped around this level. So it's showing signs of a short position coming in the long term, which is a short trade I've been looking at for a very long time, and right now is almost that time. So I'm waiting for market to come below this level, break this level, to give me that confirmation that now we're in a bear market. And once that is confirmed, I'll be looking for short trades to continue shorting this pair to the downside. If you go down to the 4-hour chart, so looking at the 4-hour chart, we can get to see all this noise that was happening. So I remember this day market spiked up above. This was a lot of pips, more than 500 pips shoot within it was actually about 1 hour. This was early morning, so market opened with a very huge gap and shot all the way up from lows of 1.97 to highs of 1.07. So about 1,000 pips within an hour. So you can get to see why GA is the most volatile pair. It's a very high volatile pair. So when you don't understand what is going on, just leave this pair alone. So basically we had market shot back up, came down, had that support level, sort of came to equilibrium, bounce, and market shot all the way up above. We had RBA interest rates, that's the Reserve Bank of Australia. They had a record low interest rates due to this coronavirus, what is happening, what is going on around the world. So in order to stimulate the economy, to help the economy survive, they had to lower the interest rates to records never seen before at 0.25 level. So we had that shot up, then market came back down, sort of had that correction again. Then now we started. That was a lot of irrational exuberance, a lot of people just trading, entering. This was a lot of quantitative trading that was happening around here. Yes, you can make money around here, and many traders made money around here, but according to my strategy, I was waiting for a more rational position, rational people, rational market. So we can see now market came and had that better move to the upside. We were capped around up here again, yet again, and now market is shooting down below. So we had this trend line, counter trend line, and now market has broken below that level. If you go down to the 30-minute chart, you can get to see that market has been dropping ever since. We had this gap open that hasn't been closed. I won't tell you to pay your attention to that close right now. At the moment, it's quite useless. So, but market has been gaining to the momentum to the downside. We're also seeing GBP pairs across the board on a downward trend. So that's something you pay attention to. Look at what is happening on the other GBP pairs, and that's what you get. So basically, today I wanted to give all those analysis. So that's about 5 analysis with a deep analysis on gold. And yeah, so this is basically what I'm looking at. Market to push further down, get to that level, then see how market will react. Will we continue with this crazy rational exuberance movement sideways, or will we get that push to the downside? Of course, this pair won't move just in a straight leg. Of course, it will have corrections along the way, but that's what I'm looking at the moment. We might even be capped to this level, maybe have another double retest over here, which if market gets that double retest over here, it's a very good entry, and then market shoots down. So that's what I'm looking at. No trade on this one, unlike the others, but that's what I'm paying attention to. So that's basically what I have. Hope you guys have a wonderful week. We're trading from home, making money. Don't forget to subscribe to our subscription. Just for $35 a month, you can get back your money while trading that and pay for the next few months. We're just giving you a guide of how we analyze the market, where to enter. If you're not having confidence to enter the market, we help you get that confidence if you enter where we're entering. We're not also telling you that those are signals. We analyze the pairs with you and give you an analysis of how we think, high probable analysis. But at the end of the day, we tell you to do your own analysis and get your own entries. We're just giving you a guide, basically. So that's basically what I have. Hope you guys have a wonderful week, and I'll see you in next week's Technical Tuesday. So see ya, guys.
Economic recession and a bear market.
This is the time we tell you people to sit tight and watch the markets closely.